And you did mention the fact that you should be overweight on the large caps, stagger your buying, try not to actually venture into this mid space, at least as of now. But when you talk about large cap and when you talk about the large exposure on the markets, it has to be the banking space. So is there that the space that you would advise one to look at very closely, given the fact that the valuations now are at a reasonable levels, and you've seen persistent selling in that space as well?
Undoubtedly, the FPI selling in the banking and financial services space has resulted into valuations now trading way below historical average for many of the private banks. The NPA cycle is under control. RBI is improving liquidity, which will push up deposit as well as credit growth. And bearing banks which have exposure to microfinance stroke unsecured personal lending, rest of the banking system seems to be in a better position. So undoubtedly, banking and financial services one sector where one could look to add during this correction. The second space where we are bullish is consumer discretionary space. In the budget, about 1 lakh crore tax rebate is given to taxpayers. 8th pay commission should put money in the pockets of government employees towards the beginning of next year. Both these two things will be positive for consumer discretionary. We don't expect this class to spend money on roti, kapda, makan, the basic necessities. We expect them to spend money on experiences like traveling, like tourism, like QSR, like education, like healthcare, like premium brands. So consumer discretionary space is something which looks interesting apart from banking and financial services.
As a house, Nilesh Bhai, you've been bullish on cement. As a house, you've been bullish on IT, and consumer you already outlined. Let's stay with IT. IT stocks have corrected 15 to 20%. Some stocks are down about 30%. Why have IT stocks corrected? And after the correction, are they a buy now?
So again, in IT stocks, it's all about expectation. There was fear that US might be slowing down. The Google searches on US recession has increased. So we are probably looking at hard landing as well. That is direct impact on IT business. The second challenge is of technology. There are many IT companies which have significant exposure to BPO, and clearly AI chatbot are taking over BPO jobs. Even programming is not far off, and there are worries that AI-related programming could take away many of the programming jobs. Undoubtedly, in IT, there will be two kinds of companies. One, which leverages AI to deliver better, cheaper, faster solution to customers. Now, if you are a large behemoth, to turn around a tanker is likely to be a bit difficult. But to turn around a speedboat might be easy. We have been bullish mid and small IT companies which are leveraging artificial intelligence, which has limited or no exposure to BPO. And we believe these companies should be able to gain market share as they provide better, cheaper, faster solutions to their customers. The companies which are investing in developing AI-related ecosystem, as many of the companies will develop their small learning modules, small language models, SLMs. They will also create an ecosystem which is closed loop. And this opportunity could be as big as IT services industry. So one will have to become bottom-up in stock picking in IT services.
If you like this video, then like, share and subscribe to ET Now.